Hugo wants 200, baby.
You ready to get back to the trading action?
You aim, you shoot, and make money.
It's going to be a great day. You guys know where you're at.
All right, everyone. Welcome to another beautiful day in the market where the crash seems to be over, at least for now. So we need to see what's happening later, where it's, is this a dead cat bounce? Is this a actual bounce? Who knows? But for now, we're bouncing pretty good. So, after the week that we had last time, I'll take it, right? It's one of those, right? Sometimes we want a big gain, sometimes we want a bottom to be put in. I'm certainly not calling for that, but I'll take any gap that we can get, right? So without further ado, we're going to pop into the charts. We have Mitch joining us just a little bit later. Again, he cheats on us on Tuesdays, but I'm glad that everybody is there, and I hope everyone is doing well, right? So this is the gap that I'm talking about. This is just the SPY here on an intraday chart. So you can see, not only did we, after the close yesterday, start to slowly grind up in the after hours, we gapped up a little bit today, and then we've been grinding higher there ever since. So, so far, knock on wood, do whatever dance you need to do, but so far we're holding on, right? So without further ado, we are going to just start scrolling around and kind of seeing what's going on. So first, let's take a look at the economic calendar. It is Tuesday, the 8th. So there's there's a Fed guy speaking. There's always seems to be Fed guys speaking. That's not till later in the day. So in the pre-market, we got nothing. So we got nothing that's going to move us in a big direction any way, shape, or form. That's good, right? So we can kind of move on from that. And then let's grab the heat map, and then let's go with the pre-market change. And pretty obvious, pretty green, and pretty green not only just there, but kind of across the board totally. So, right, we have tech up, we have healthcare up, we have finance up, we have retail and Amazon's doing well, consumer services, and everywhere you look, things are doing phenomenally across the board. So it's a bounce, right? We're bouncing. So the question is, if we go, I'll do SP 500. Oh, I gotta go back to candles here because I know a lot of you guys are candle enjoyers, and just turn that off. So this was yesterday, right? If you were here with us yesterday, you saw the craziness that was yesterday of a kind of will they, won't they type of idea of hey, are we gonna gap up? Are we gonna gap lower? Or is so there was a tweet that made the rounds randomly that just said, hey, we're putting a pause on tariffs. And that caused this big spike. Might be easier to see on a 30-minute chart here. That caused that big spike right there. And then CNBC got in touch with the White House, and they said, we have no idea what you guys are talking about. And right back down we came. So, but the beauty, I think, and the strong idea of what it is that we're looking for is that, yes, we're having that movement go on. We're having that idea of it didn't crash all the way back down. And that's the movement I really think that we're looking for as well. The idea, when you have a news event that happens, and then that news event gets instantly debunked, the worry is that it's not only going to give back all of those gains, which it kind of did here, but that it's just going to keep bleeding lower, which just basically means that this news event was the only reason that they, quote unquote, were spiking the market. The fact that it pulled back and filled most of that and then held and then started to grind higher just kind of made it seem like this was the excuse that the market was looking for, but it didn't need to be it wasn't the sole reason that this thing moved, right? Or I also would have just kind of retraced. So Now, what was the reason for the bounce? Me and Mitch were talking about this a little bit, where feels like anyway that this could have been, for now, until we have some sort of evidence otherwise, and I'll show you what that looks like, just a dead cat bounce, right? And so it's a morbid term. But a dead cat bounce essentially just means, hey, you're looking for, as things start to sell off and as things hit more and more new lows, you've got two groups of people, right? You got value investors, and they're getting super excited, right? These value investors are like, okay, it's time to buy. You also have shorts. You got people who are right, people who shorted up here, right? We were talking a lot about this 2-day VWAP from this price right here, and you only see that on the SPY. Right, so this anchored VWAP from the all-time highs, we came in, we hit that, and then we just tanked. So the people who shorted around that area, they had, like a 20% gain in a couple of days. So you got to always put yourself on the other side. There's always people buying, there's always people selling. So you got to put yourself on the other side. You say, if I was a seller and over 3 days I made 20%, am I going to cover some? And the answer better be yes. Otherwise, you are an exceptionally greedy human. So this is what I think kind of spurred it, regardless of the news that was floating around and who they're trying to blame it on and all that kind of stuff. I think this was, the market was looking for an excuse to bounce, and we'll get some sort of when the bounce happened, the question is what's next. So what am I looking for? So if we go in and just do the SP 500, because this just tracks the futures. The question is what happens on any kind of a pullback, right? So far, the market's obviously just been making downtrends. So what we want to see is when we pull back, who knows when it's going to happen, but when we pull back over the next couple of days, do we dig in here lower and then start to push higher? That is the beginning of what we need to see for a potential uptrend. We are no evidence of that right now. So it's one of those bounce until proven otherwise, I think, right? A short covering rally until proven otherwise is the way I'm putting it. And again, for that, I want to see a bounce happen, and then I want to see a pullback, and then a higher low made, and then we start to kind of grind higher. And if that starts to work out, right, and we're back above this low that we broke down from, back above the anchored VWAP that kind of looks something like this right now, right, all in that kind of 5,500 area, that's where I'll start to get a little bit more excited and maybe look to do some trend trading. But right now, it's all from a swing trading side of things. It's all revision to the mean. From a day trading side of things, I'm just looking to scalp both sides, right? I'm not looking to take anything crazy one way or another. But while Mitch is out there cheating on us, we have our buddy Steve. How's it going? Oh, look at you, all upgraded back there. You don't have like the casting back there anymore.
We're upping our production value a little bit. It's a little cluttered, but at least you're not looking at a couch all day. So
yeah, that's good. I like that. So how are you thinking? How was yesterday? The probably one of the wildest days I have ever seen. There's a lot of gray in my beard, so I've been doing this for some time.
yeah, absolutely. It was probably literally, I probably said it 10 times yesterday. This might be the wildest price action I've ever traded in my whole life. I mean, maybe I'm being a little superfluous, but honestly, I can't think of a single day that was more extreme in terms of reaction. And
Yeah, I remember
considering the news wasn't news, right? For the most part, it was kind of fake.
Yeah, it was wild. I was sitting here and I was measuring from the intraday high, and I'm like, the SPY is down 3 to 4% from an intraday high. So it's just, those numbers I think get lost a little bit, but you're talking trillions of dollars made and then trillions of dollars lost in minutes, right? Like 5 minutes. It is just wild. Like we see we see a move like that can happen off. I think they're tracing it back to Walter Bloomberg. Like some guy misconstrued something that Trump said, and I know our boy Walter's getting thrown under the bus. I completely disagree, because he's never coming up with the news, right? He's just retweeting. I think he's got like a bunch of news sources that he aggregates. I don't think it's a human. I think it's an AI. at this point, because it's going 24/7, 365. Either that is the most dedicated person that's never shown his face ever.
Right.
Yeah,
hey, maybe it's the long con. Maybe he's been doing this for 10 years, just to set up for this one tweet, and he cashed in on 0.1 tail risk options. So
yeah, there you go. And then,
who knows? It's pretty wild stuff, right? So yeah, I've agreed with everything you've been saying so far as I was watching you here. Really good stuff. I think that you're right. It's reversion to mean primarily. That being said, I mean, you said anybody who's still short after that drop, they're a greedy little piggy. Maybe I'm paraphrasing there, but I've been a greedy little piggy on the way down. I'm pretty happy with my gains, so I booked all of them yesterday, just about at open, and I was taking a quarter off of my position, maybe 5 minutes into market, a quarter off when we front ran 480 there, just about. I think Q's was just kissing 400, and heck, I got stopped out of the last tranche because it ripped like crazy. But gains are gains, and I've started to deploy some cash. I'm not ready to call bottom, but I am ready to put some cash to work.
That's good. Yeah, I'm kind of the same. I'm with you there. I don't, I'm not going to say, hey, that was the end. But every bottom starts somewhere, right? And it's one of those, you generally get that V, and then what happens next, right? Is it relentless buying all the way up? That's what we've seen in the past. I don't think, I don't think we're in that environment right now, but that's just kind of my bet. More of what I'm looking for, more of what I'm thinking is we're going to potentially retest this low or retest at least some of this low. And then that's where the kind of real interest becomes, because do we retest the low and there's buyers there? Then great. Then, we're looking for buyers at a higher price. Do we come back and test this low and we just, fall right through it like a stone? Well, then that wasn't the low, right? So, the question is, how deep will they pull it back, and kind of what will happen when we get there, right? That's kind of what I'm looking for. But it's just crazy action. I don't know if I've ever seen, I think it was like a 5% intraday move top to bottom that quickly in just minutes in my trading career. It's
pretty ridiculous, right? I think somebody dropped the stats of the top 10 biggest points moves in a day. And I know it's deceiving because we're so high now. So obviously numbers are bigger, but it's like twice as big as the last one, which was also this week, I believe. So it's wild stuff for sure. And if you're ready for charts, I have a fun one for you.
Yeah, I'm always ready for charts.
Speaking your language.
Oh, I got to remove one. Yeah. So you can always, you got to remove one.
Is there room for me?
Oh, there he is.
In this bullish camp over here. What's going on, you bulls?
We are enjoying the festivities, I'd say.
I could see that. I had to come on in. But I'm looking to make money today. That's what I'm looking to do. I'm looking to get the little account, the 5,000 account funded today. Let's get it done.
Ooh, let's do it.
Opened it yesterday and trying to get it done within the 3 days for the competition. Trying to also win that competition. So anybody in those little accounts, you better step it up. You're competing with Money Mitch here. So get after it today. We'll see who's getting after that competition, who's going to get that money or those free, of course, evals that come with it. I'm going to get it. I'm looking for it, and we're going to keep it going. We're going to have multiple accounts here, and we're going to start playing multiple strategies and multiple accounts. I think that's the best way to go about it. And that way you can just look for one of the strategies to keep working, right? We'll see what happens today, guys. It's going to be an interesting day indeed. I'm just in the camp. I'll just be right here. I'm in the sideways camp. And so that's not a fun time, guys. I will say that that's the camp that I'm in today.
Totally.
I think, we've done a lot of our work overnight already, right? And then for people who are intraday trading, that's not fun. You kind of want to see some craziness happen, off the open there. But it's one of those. So far, anyway, we're not getting that, right? We're getting a big push off the open, and ideally, you kind of want to gap down and then a push from there. That'd be great, but
Yaz, you're part of the competition in the chat asking about if you have an old limited account. Am I in the competition? Anybody that has a actual eValve or funded account, you are considered in the competition. The idea here is just tiered. We're giving 10 prizes and we tiered it in each prize, right? Because we're not going to put someone that has 200,000 in buying power against someone that has 5,000, right? That just doesn't make sense, right? So we just did it in, I told them, let's do it in tiers, right? We'll just get 2 winners in each tier. And that way it's just kind of something that's an added bonus for doing really well. Essentially, we're rewarding you for performance here. That's what the competition's for there. So we'll see what happens there, guys. And of course, if you bought the eValves and you complete it in the 3 days, you could get that extra bonus. At least from what I'm aware, that doesn't count today, right? And so it's not 3 days from now, right? Don't open one now today for that added bonus. But you could also reach out to us and maybe ask, maybe with a nice little question mark, see if you can get that added bonus if you open one today and complete it in 3 days. But getting after it, guys, $200 on that $5,000 account yesterday. That's not bad at all. Let's see what we can do today, guys. All right, I know you have some charts for us, my friend. Let's kick it off with these charts, and I'll let you guys keep running.
Yes, sir. Yeah, let me just walk you guys through my view of SPY really quickly. Just I thought there was some really fun precision technicals going on that maybe people are unaware of just because of how egregious this sell was. So first off, we've been talking about this megaphone as it played out for a couple months. It finally broke down and back tested. I don't have my moving averages on right now, but we have back tested right into the 200. Never a good sign when you're below the 200 and then you back test it and reject. So that's when I kind of took the position that I think we're getting this kind of measured move, Elliott wave, whatever you want to call it, ABC correction here. As you can see, it speed ran it pretty significantly. We took out the major August low. I think that's very important. That was the last time we had. That's April? Here's the August low. Wow, we got down here so fast. So yeah, we took out the last kind of capitulation event that we had. I think that was something on a lot of people's charts. And the most important thing I want to talk about, we retested the highs from. We'll pull up a yearly chart here and turn the drawings or hide the drawings. We just about back tested this multi-year level. So this is what I was looking for, this multi-year level. And also because it aligned with the 50% retrace from the October lows. So there's a lot of kind of cohorts of buyers looking to buy in this area. And it did front run it by a little tiny bit. Just about there though, that's close enough for government work. So that's why I was closing all of my shorts. I mean, I was quite a happy camper. We just went right there. So now I'm looking to put some of that cash to work. And I think that we do have a decent amount of room up, even if this is a little bit of fake, even if we get a double bottom, like Michael was talking about. Honestly, the sharper the bottom, the more kind of sketchy I am about it in terms of its longevity. I would like to see a more constructive price action and not just the squeeze. But that's kind of where my head's at.
Yeah, I'm with you. It's about what's next, right? You get the V bottom, and if you were lucky enough to participate in it, thankfully, again, as a systematic swing trader, I had a whole bunch of revision of the mean stuff went on, so I'm a happy camper right now. But if you miss the V bottom, then it's all about what's next. What's the next thing that's going to end up happening? So again, the market has been conditioned for a long time to have these V reversals. We've just seen it over and over again with the yen carry unwind and all these things. It's been dip and then rip back up over and over and over again. I don't know if we're there right now. It just doesn't, I hate to be a feels guy as a quant, but it just doesn't feel like we're there right now where we're just going to rip back to new highs. So, the question always is, right, is it dead cat bounce or is it a real bounce? And the only thing that can answer that is time, right? That's we gotta watch, we gotta take a look at the price action and the what happens when we pull back. Where does that pullback end? Ideally on a higher low, ideally higher than the prior low. If we break and close significantly below that low, we're just more of the same. We just got to continue to sell off and deal with it then. So I'm still very much, day trading and then looking for mean reversion type plays from a swing point of view. Right? Show me things that have dipped, use my algorithms to find them, have the system buy them for me, and then I'm out in like a week or so. Just trying to trade these short-term bounces as we have them. It's been keeping me alive and the family fed while this crazy market goes on.
I totally am with you there. I just wanted to note, I just pulled up the hourly and saw something kind of interesting. If you measure the cash session close right before the tariff announcement, all the way to the bottom of the cash session, actually that's pre-market. But, no, that was regular hours, I believe, hourly chart, so half an hour in. The squeeze was just about a 50% retest of that move. So I'm a huge Fibonacci guy. I love the 50% retraces. That's why I was looking for it. Our big one here on the weekly. So I think that'll be really telling if we can break through that and then try to back test that. I think we could be looking pretty constructive short term. But otherwise, this is a mean reversion move.
Love it. And I don't think there's nothing wrong with it. I think it's exactly what happened. The Bulls finally got capitulated throughout the weekend and came in scared as their swings did not work on Friday. They sold at the open, hitting those sell buttons, right? And some bears kind of looking for some profits on the first action down. They said, you know what, maybe it's enough, and started hitting the buy button and getting out, right, and covering. I think it was a lot of shorts kind of profit taking. You can also see that with the amount of volume. The pure volume that was in yesterday was a very important aspect, guys. It traded just as much as it's done in a very long time. Just take a look at the daily charts, right? When's the last time you saw the TQQ trade 400 million shares? I'll tell you. It was the bottoming event that happened in the bear market of 2022. So here's a nice little added bonus, right? You don't hear too many people talking about that today, right? And so I'll give you guys that look, right? And I think it's important to be looking for high volume events. That shows you more and more, yes, this is the short-term bottom. Now, what happened in the last wave, right? Because I believe things happen in waves, right? So we got in one wave. This is the second wave. Now we're going to get ourselves the bounce. How big is the bounce, right? If you saw on the first bounce, we kind of went into a bear flag. In this case, we have this kind of V-shaped bottom. So what could happen? Well, you use trend line approaches right now, and you just try to ride a V and continue the trend higher. Or you also look to see what kind of patterns can play in. I think what happens here is essentially probably an ascending triangle plays out, where we'll have some kind of ascending trend line with the V, right? And then a horizontal line that will start to create as resistance. So in this case, I'm looking for sideways action, but we still got a little ways to go here. I think on the market, we can close the gap at least from Thursday gap, which is the low there, 536.70s, and then start to go sideways there. So we have, I think, a little bit to the upside. The question is, are they going to give it to us in one day or not? And then what happens when CPI comes in? Because CPI is coming in, guys, and I think that's one of the major factors this week that could be the next takedown, or it could give the potential push to the upside. The big thing is we haven't seen CPI shown really effects of tariffs, and it's not going to show effects of tariffs. This is one thing that we've been clear about here, that the numbers are not where it is. It's just talk right now of what inflation can go to and the effects on supply chains. It's not the actual inflation showing up, and it's not the actual effects of the supply chains just yet. It's a bunch of forward thinking, right? And we know the market is a forward thinking mechanism. That's why the market went down here, right? It's the forward looking outlook of what potentially the tariffs that are being mentioned could be hurting the market, right? Now, when things get pulled off, those outlooks could change, right? This is why it's the tape bomb environment. I went on Trader TV today and I talked about how this is what we're in. Welcome to it, guys. Tape bomb environment, and it isn't going to change during Trump's presidency because it's going to be always, we're one tweet away from going up 10% and we're one tweet away from going down 10%. And so with that being said, well, hold on to your pants, guys. And for traders, this means a lot of opportunities. But one thing's for certain, you can get run over in this market. So learning lesson for everyone out there, top learning lesson today. Don't be that trader that gets stuck on one trade so much that you get run over. You destroy accounts because one trade is too much to let go. Remember, you can have 30 trades in one day and just keep battling. It's sometimes better to be the battling trader, willing to cut and take, multiple trades, than being held on to one decision. So that's one thing that I'll give you guys as always a little nugget on today's show. I think that's one of the nuggets that we should focus on today, being able to let go of trades in this environment. Like the same way if you were short and all of a sudden the market started coming back on you yesterday, well, if you didn't let it go, you didn't take the cash, right? Yep. And in this market, especially in this kind of volatility, it'll come and take your cash if you have it. That's the way I feel like it is. You see yourself up a good amount, a good percentage, you get a momentum move in your direction. There's nothing wrong with paying yourself along the way.
Absolutely, Mitch. I think you're making a lot of great points. I just wanted to note, since we do have my chart up here, these lines here, these are my take profit levels for my short position.
Ooh, I like this.
So I was selling right here 5 minutes after open. I sold right around here, I believe, 484, because I was watching the 480. I wanted to get just about all out there at the fib. We could not touch it, and like you said, you can't be super committed to your plan. You got to be able to stick and move. And I saw that there were buyers here after no buyers for a very long time, right? So I took some there, and then I put my stop over the pre-market highs for the rest of it. And that's all she wrote. 5 minutes later, I was like, yep, stops are worth it. Stops are good. Somebody once said stops are for buses. I think they got blown out here. So, it's always good to protect yourself and move on to the next trade. And that's what I'm doing. So we got the market open in 3 minutes, but can we talk about what we're buying here? I know what I'm buying.
I think it has to be quick. One of the things is you need to be looking for what maybe did not go yesterday to go today. As stocks that have already made the move, I'd be looking for quick pullbacks. The SPY has gone straight up all pre-market, so be careful for a little bit of a pullback out the gates here. Especially with just the straight up action that we've seen, right? So it doesn't mean that the dips won't get bought, because I think a lot of bulls are digging in today, ready to buy. But I'm the camp that tells me that we get chopped. Not necessarily, don't let the bears really get winning again, but not letting the bulls just think that they just have the bottom picked out, right? And so just be careful for whipsaws kind of day. That tells me, in my eyes, I should be looking to make quick money, take little amounts, and try to stack it today versus trying to make one big trade.
Yeah, I should clarify. I'm thinking for like my first tranche of DCAs into stuff that I really think are quality names. Not I'm 100% with you, and I'm looking for a discount. I'd love that. I started little positions, but I'm not invested as much as I'd like to be if this is a V bottom. That being said, I'm not playing for that. Not putting all my eggs in that basket.
Yeah. Look for areas that got hit the most, right? Like, let's say like a Dell. What had the best bounce back, right? You got to look at things that can have the best bounce back, right? Whatever got hit the most, a lot of the times when you get these situations, they have a pretty good bounce back also. If you think about it from the bottom, Dell's a 15% bounce back. Yeah. So things like that, right? So I'm looking at essentially what was beaten down to see what didn't move yesterday. What didn't move? What about solar today if we are seeing technology move higher? So my look here for solar could maybe get a nice little lift. That's a good looking chart, hourly above, let's say 135s. Doesn't look bad here. Starting the market off. We'll see what happens. But another concern is, if it is solar, that also tells me more and more that this is maybe a sideways rally. This is just momentum bounce back, and we could see a little slowdown. Market's about to open here, guys. Let's have some fun. Stay safe out there, traders. Get after it. Do what you do best. Good luck in the competition. Good luck to all you guys in the evals and those funded traders. Stay to what makes you guys. Stay to what makes you guys. We'll see what happens out there. Let's get after it, guys. Ding, ding, ding. You know what the sound is.
Showtime.
Yeah, open.
I haven't done this one in a while. It's time.
yeah, just grinded into the open there. Just the market grinded higher just the whole time we were talking
You get
to
paid
open
to
right
stay
at pre-market
overnight,
high.
right? You get paid to stay overnight. You could be trading after hours with Trade the Pool. Don't forget that, guys. 10% buying power, but just that alone, a lot of stocks could have made you some good money.
Absolutely. Yeah, no, it's been wild watching the pre-market. I've been eyeing my phone the whole time. So I did take starters in AMZU, some leveraged 2x leveraged Amazon. I think that they had a really strong response early in the day, and they were a name I was looking at. I think that Reddit is very interesting to me. It filled the gap with precision, and then that's all she wrote. And that's like you were talking about, Mitch. I was looking for really beat down names, and Reddit was one of those. It was down, I think, the highest from 52-week highs on my radar, at least. So that was a big name for me. I think they are quality. So yeah, that's on my list as well. I'd like to add a little bit more there, even if we go lower. These are names that I want to be in. Other names on my list are Hood, Uber, UNH. They had great news. So we are getting some de-risk here. Let's see how much it goes down. Man, my brain is so distorted from the candle sizes lately. It's like I can't.
I know.
Big, but it is.
Little moves look huge. Big moves look tiny. Yeah.
Yeah, I'm watching NAOV. It's just starting to pop off there to 9 there. I didn't react up to buy for the 850, so looking for an 830 pullback here. It's strong, man. Went up there to 930s. That's a top watch in the small stocks today. And we'll see if I'm able to grab this and make some gains. I'd like a pullback here to 830s here on the next candle in the 5-minute basis.
Retest that little base there. Yeah, I can see it. Look at that.
Look at that, guys. This is why I'm watching this one today, man. That thing's wild, man. That thing is wild.
Great call. Look at that.
Look at that. It's going into a halt, guys. It's going into the halt right now, guys. So there it is. I got to tell you guys, I should have just jumped on it, man. 850. I hesitated for a second there, and he went fast to 880s, and I was like, oh, just come back to the 60s. Come back to the 60s, and it just flew. It just flew on me. And I hate chasing. That's one of my things of not chasing. But this could have easily been, and I was going to get 100 shares. This could have been that small account winning the small account right there. So I was looking for it, especially with stock at this price. Good stock. Another stock up 100% that we've been seeing these micro caps move 100%. I'm glad that I also brought this stock to Trader TV. That's what it's all about, guys. It's setting people onto the great stocks and looking for the move, looking for repeated patterns. I didn't tell you to look at this one because of the catalyst today. I said, look at the repeated pattern nature that we're seeing. We're seeing multiple 100% runners. So if you see the next 100% runner, that doesn't mean that this is going back down to zero. That means pay attention to it because the attention from the gurus love these names, right? These are the names that make them $10s, $20, $40, $60,000 in nature. Because if you're buying this up with, look at the bid size that was out there right before the halt. It was 14,000 shares. You don't think somebody was like, oh yeah, any shares I can get right here, right before the halt, I'll take. Right. Yeah. So things like that. Right. And you got to be looking for when you have the repeated pattern nature. Right. There's sometimes when penny stocks completely disappear. And then out of nowhere, we're starting to see 3-4 names, 100% movers. Well, that already put it on alert. This all started really with like MLGO and other names really making huge moves. And it just transitioned down. It started to go to low float names like you saw yesterday. Micro caps, right? BJDX, and names like that. So, QBTS just triggered the VWAP fade to the short side. So I just took some of that short there with just a stop over highs. Just looking for, again, what is the junky stuff that's up? Might want to take a look at that to short side and vice versa, but triggering as it should via the system. So
feel free to put your chart up there too. I think we're still on mine.
Yeah, sure.
Cool.
Right. So there's the flushing a little bit there. All right. There's the blue arrow alert. I went through one of the reasons I like this one is that, yeah, it was up a little bit, but for junky thematic stock, not too much. So, right, you wait for your blue arrow, you take the trade, you put stop the high of the day. The 2-day VWAP is all the way down here at 640. So I just put out a little target, just a little bit above that half number, so like 655. If we got there, I'd be a happy camper on that one. And then we just continue to wait. We'll talk about this a little later, but I actually have this system now fully automated in my Interactive Brokers account. So now I'm looking for another system to potentially build and trade the pool while we wait for a little bit of automation there.
All right, guys, take a shot here in the small account there and the eval here in the comp, taking a BTOG. And this is as small as I'll probably ever get, guys. But I don't see even too big of a potential move. I see maybe about 15 cents, 30 cents on this name. But hey, I'll take 500 shares and give it a shot here to risk about 3 or 4 cents here. We'll see what happens there. It's a really small name, BTOG.
All right, so the SPY, again, the first little opening, come on. Yeah, the little opening move there is down. Right, we're just coming back to test VWAP, but we had a massive pre-market move. So some sort of give back off the open.
SXTP alert for 3. Sorry, guys.
Oh, no worries.
All right, a little flush out there. Let's see where we go. Big volume.
How excited are they to come in and take profits? That's the big thing, right? Is this when do buyers kind of aggressively step in and then take this thing higher? That's what we need to be waiting for. So VWAP seems like a logical place to look first. A 2-day VWAP is way below us. It's all the way down here at 500. So hopefully we don't flush that far, but we certainly could.
Yeah, that'd be a little spooky, I gotta say. Make me feel a little bit silly for not loading short today, but I don't know. I don't want to overstay my welcome. I feel like when you catch the majority of the move down, I was short from the tariff announcement because I thought it was insane. I was like, all right, this is enough. I don't know where we're going, but I'm getting out and reevaluating. So I think that maybe I'm a little bit too biased long just because I can't think that I'm, I can't think that there's much more room, but there's always more room.
Yeah, can always go down another 100% from wherever you are. But yeah, I think it's just when we go into that next range, I think that's the important thing. So right, we're just flirting around. This doesn't feel like a very aggressive move lower either, right? It just almost feels like it's floating down a bit. But then I feel like I always bring in this tool out way more than most, because that's nearly a 1% down move in the market from the pre-market highs. So again, short just QBTS, the only thing that's come through so far. So we're just waiting on QBTS. Right?
I'm long SXTP.
Fantastic.
SXTP?
Yep.
Wow, looks great.
Pop over here.
Cooking.
Looking for a 3 pop here if it can get going here, guys. Risk is pretty much off to 270s. I just got long, so I'm probably you can get a better price than me right now. I'm like 2 cents in the red here. Just looking for the pop towards 3 here, and it can go back to 260s, so just got to be careful with that outlook. But going to give it a chance here to go and break. There it goes. It pulls back to that 260 there. I felt like this could be the reload spot and the spot that it can really go off of, but I didn't want to risk too much there. So I got out for $31. Going to look to see if it reloads through the 260s. Doesn't look bad at all on the 15-minute. It just needs to kind of hold here for a little bit and then get right back through the 260s. So remember that this is the kind of that liquidity pool. Big size there got filled there on the bid. There's a big size at 253 right now, 10,000 shares there. So we're going to look to see if we get back into the 260s here. That's the spot where it needs to kind of start getting the size again.
SPY with the first bid candle today. So keeping an eye on that, seeing where the candle closes. Looks strong into the close of the 1-minute candle, but I'm looking for the 5-minute close, and then I want to see it reclaim that little swing high that it's testing right now.
Yeah, right. Flirting with VWAP, right? So we need to see
I think NAOV is reopened. Yeah, NAOV went to 1250s, 1290s, guys. What a move there. What a move.
So Archer triggered there, ACHR. So I'm going to take that one as well. Again, nothing, not going crazy with any of these. Small size, because if we do get a little bit of a flush off the open, there'll be some good little early money to be made there. And if
That's
not,
a crazy one.
Take the trade. So.
All right, let's go looking around, guys. Let's find you where the trade is today. Financial services up 1%. So there you have it. You want to know where the trade's at? It's in the financial area. Global banks up 1.2%. Insurance brokers up 2.18. So insurance actually making a nice little move there. So what could you be looking at there? Look at Bro. What a ticker.
Yeah.
Bro.
Right, that's what's leading the financial sector, right? We got to remember that old Papa Buffett's there. Oh, and this was actually, is this it?
Yeah.
I think
so insurance companies making a good move there. So that's a good sign there. And what do you see also making a good move there? Asset management. So BlackRock bouncing back, Blackstone. They're good to see the financials up today, guys. That's a good area to see.
JPM is really strong, and we have earnings coming up. I think that's very notable. Everybody's super bearish, thinking they'll revise down.
Smart.
Probably priced in to some degree, and I think that JPM under the 200 is never going to be a bad time to take a little taste. I never say never, but I'm pretty bullish on JPM and Goldman. Basically, as you were saying, also Blackstone, BlackRock, very interesting names there. JPM pushing strongly. Like to see that.
I'm leaving this on Papa Buffett's chart, right? This is for all the Warren Buffett haters right here. This is all of the billionaires and how much they lost during the collapse, right? 130 billion down for Elon, right? All these guys. And look at the one guy that made money during the crash. His net worth actually increased a little bit during that. So for everyone out there who's a Warren Buffett hater, right? This is what he does. When the market goes down, he's ready there to buy. Levi is going to be the miss of the day. Just look at this thing. So this came through, just completely and utterly missed it. Was looking at other things. Blue arrow alert from VWAP right down to the target of the 2-day VWAP and done. So that would have been the
taking the hit right back down. Nike, the retail trade not being able to hold on there. That's for sure. There's some green on the screen there, but if you see from the open, it's all bleeding out a lot. The only one that I see that's holding a little bit is Burke, but that's just because I'm flowing through names, right? That's one of the good things of what I use here. You can see names really quickly there, and apparel actually up on the day from the open. There's some areas that are doing well. Urban's bouncing back a little bit today. Stitch Fix is bouncing back. The cheap ones, right? Ross having a good bounce back. TJX, Burlington. Those are names that actually could have up moves during this time. Why? Because those are areas where shoppers go when things get tough. So DG is actually a name that could see continued upside, things like that, right? So just to look at it, I called this on Trader TV, the I can't live without trade today. Look for those types of stocks to do well.
SPY bouncing pretty well here. Came in, test VWAP pretty much perfectly. And also this pre-market range. And now we're putting in a little bit of a bounce here. So the question is, right, do we hold this and rip back through highs? I certainly hope so. That's someone who bought a whole lot of stuff. I think when I looked at the aftermath, there was like 7 or 8 mean reversion triggers that triggered off the open yesterday. So again, I'm a happy camper to fully automate that and not have to. It'd be very hard to be there in person and have to pull the trigger in real time there. I don't know if I would have had the guts to do it. So, I'm glad computers do it for me, right? So yeah, one of the big ones, which I'm actually watching from the short side today in case it fades, is Palantir.
I'm with you.
So I got triggered right at that purple line. That's where the bot said to buy. That's where the
NAOV trying to break through the high right now. We'll see if it breaks through the high. That thing is the fastest mover in the market right now.
Yeah, so I'm watching to see if there is a fade there in Palantir. Some point today under VWAP.
my little community, they've been very short. There were some degenerate Palantir 60 strike puts that popped up on our flow radars, and people made a nice tidy profit on those guys. Somebody knew something, or at least knew that this was a good place to be short if the market did not like tariffs. So interesting there. Just those high beta names, those high runners, high flyers. What goes up must come down eventually, maybe. In this case,
eventually, right? The question is, can you pick it? But yeah, there's MDGL, right? Got in right here. G, whatever this is, right here, right? So this is all systematic, right? And I have no idea what any of these companies do. They just came through a system that said, here, get involved at this price. So, so far so good. I'll take it, but I need the market to hold, which so far it's certainly doing a great job of that, right? Came back in VWAP and then bounced pretty to the tick right off it, right? I don't know what else anyone would want. QBTS is still working, and then ACHR is not. So QBTS still can't get going even with the market bouncing, which is a good sign. And then ACHR is bouncing with the market, so that one's not working out for me. So stops at highs for both of those, and just have the target out and let them go.
And AOV trying to get it here at 12. If I can get it near 12, I'll go for a shot here. I need it right underneath 12 for a second here.
So grinding back to highs. We've got absolutely no news today. We got some Fed jerk speaking, but that's like in the afternoon, so nothing we have to worry about. We're trading the open. So nothing to stop, just pure price action playing out. Unless, I don't know, Walter Bloomberg tweets something that sets the world on fire again. And
yeah, one thing that we could note is the potential for some selling reaction to the China tariff news. The trade war it's not a good thing. I do not think it's a good thing for equities or cost of goods. So it's just something to consider. If we're looking for a reason to sell, there could be some reaction to that. Doesn't seem like it so far, but if they tweet anything else out, it could be a factor.
All right, guys, back into NAOV.
The other sector I want to watch today is aerospace and defense. Trump announced yesterday that they're spending $1 trillion on their defense budget, which is up like 30% over the last year. So a lot of money is going to go to Lockheed Martin, Raytheon, all these kind of names. So we'll definitely keep an eye out there just to see.
They pulled it to the support there, guys. I was a little too big here. Got stopped out on the limited account there, the small boy, but it still looks good for the 12 pop, man. It just went back to like the 1150s there for a second. So took a $58 hit there. That brought me to 105 for the day. So I'm back to 100 there, but took a little bit of a hit there on that one. Still looking good there. NAOV, we'll see what happens.
So Raytheon's interesting. So it already had 2 blue arrows here. So if we get a third one as it breaks back through VWAP, that might be something to keep an eye on, right? I mentioned these things are getting a big pop because, again, it's a massive spend is being planned here for defense and aerospace and all of that. So it's one of those, hey, is that a little bit overdone? Or are people going to look to take some profits there? That type of thing. Is that is there a little bit of a trade to be made to fade these things back into, again, like a 2-day VWAP or something like that? But got to keep our eyes on the market, right? It's one of those, a little bit of a downtick, came right back to VWAP, and buyers stepped back in again. So VWAP seems to be the level. If we lose VWAP to the downside, then we might get a little bit of a sell. And then, again, it's just the question of for how long. Again, I hope we don't reach 2-day VWAP, but that seems to be the pattern, because that's way down there. So we'll see. So far, right, another candle in which buyers are coming in right at this zone. Yep. So
It just seems to me a little bit of that ping pong out the gates here. Now, one of the things is ping pong out the gates. You've given the Bulls, the Bears, both one chance to jump in here. And I think they start to wash some of the Bulls here, give a little bit of a down attempt. I'm going to be looking to see if we start to fade off a little bit. VIX is also telling me this. There's 3 bottomings and a wick there through the 68. So I don't expect a big lift, but we could see a little jump there on the VIX.
Yeah, the VIX. This chart is just
oh my God, a little hesitation there on the VIX got me a worse fill, but we're getting that jump there already. I'm long on it on the main account here, looking for a little bit of a quick lift fill, a little bit of pop fill. Then gonna just look to sell into the pop here and see how much of a pop that I get.
I have bulls on my timeline taking victory laps already, so we could see some pullback. Gotta do the TA sentiment or sentiment on TA, right?
Mm-hmm.
Yeah,
I agree.
I do have a rally cat in my lap, though, so I'm getting mixed signals. We'll have to see how it plays out.
Is Palantir running with the defensive stocks? Could be. Again, we should have like different hats that we put on when we're talking about swing trading or day trading. So it's one of those things where, when I talk about I want to look at the defensive sector, I mean later.
No sell there, guys. I was so close to selling. Sorry about that.
When the announcement was that he's going to spend like way more than any administration ever has in the past in defensive names, it's like that happened yesterday. So the gap that you're seeing in these are already have that priced in. So the question always just is, and then the idea behind my particular strategy is just the market overreacts on gaps. That's the kind of main underlying concept that I think has edge, is that the market gaps higher and it gaps lower than it should. And there's some reversion that happens intraday before the trend continues, right? And I've done a lot of math and studies and back tests to prove out that case. So then it's just where do you enter, right? So for me, it's you get the VWAP fade and a close below the VWAP. That's an interesting place to take that trade, right? So.
All right, trying to manage this VIX position there, man. I was a little upset. I had the take profit literally like 2 or 3 cents away from the rip there, and it just did not give me the fill. And as soon as that happened, I felt that feeling like, yeah, I'm about to feel the pressure right here. So I'm feeling the pressure right now on the pullback, and that's just how it goes sometimes. I was looking for the quick sell and didn't get it. Didn't get the sell, so maybe should have jumped on the bid. It was literally 2 pennies away on the offer, so.
That's too bad.
And no, I'm getting the shake too. Spy pushing a little bit there, so it's right near the pre-market high right now.
We got my buddy MXD FTW saying he's willing to bet that JPM announces buybacks on ER. I would not fade that. I believe that you may be correct. And good to see you in here, bud. Yeah, I'm with you. JPM, if it's one thing they do, it's that. They're definitely where my eyes are at. If you're a little more risk averse, you can wait and see how JPM plays out, and then play Goldman since their earnings are on Monday. It'll give you a lot more of a feel for how the bank sector's looking, sentiment, and all that. So, something to keep in mind there. If we are still in a raging bull market, which I don't believe, but if we are, then financials should definitely not be hurting.
Yeah. It's more important than chips, more important than tech, right? You can do fine without those. You need banks, you need lending for new businesses, right? That's the real economy.
SXTP now taking off through 3 now, guys. 385 almost to 4. So where are we seeing the moves, guys? It's in biotechs, and they're making the lift there, guys. I got to say I misplayed that SXTP for sure. We'll see what happens there. Reload through 3 there. Had a chance to get in there, and I started looking at the bigger names. But right here on this opportunity back to 3, it did make sense here to hold there, and it held really well. Now breaking to 385, probably going into a halt. SXTP. So definitely there's still some names out there that to make the move. SXTP, nice move there.
Apparently we got some bull flow on DDOG. So software as a service. I think that's an interesting area because it's not affected by tariffs. That's always or not as affected by tariffs, let's say. interesting. Also, Michael, I know you love ratio charts. Have you by chance looked at IGV over SMH recently?
Yeah.
Yeah,
really picking up there. Yeah.
Which
makes sense, right? You're gonna want to go to the place that you're gonna want to go to any tariff proof. That's why I think we're getting such mixed messaging when it comes to retail. Right? The XRT is doing great today, but then we're seeing some things retail fade, some not.
Here.
It's all the Goldman nerds again. I swear that you're gonna open up a basement somewhere and there's a whole bunch of interns in Goldman that have been locked there for the last 2 weeks. And they've just been, here's the financial statements of every company listed in the Russell 3000. You go through every one and give us the exposure overseas, right? And they just throw in a bucket of fish heads every now and then, telling a case of Red Bull. It says, get back to work.
Tell me a story of why I didn't join the financial corporation.
Yeah, that's especially in the beginning. That's what you do. Is like this. You've got this grunt menial work, and that's why I don't trade off those, because I know there's literally armies of MBAs going through financial docs, and I'm just not going to do better than that. So, I'll play my strength.
About to get out, guys, and take the hit here in the VIX there. It's not going, and it needs to hold the 68s now. If not, it's going to let go here fast, and SPY should break the high. If that happens, we'll see what happens.
SPY is flirting with that high. It would surprise me, right? We talked about it all the way down, right? That, if you're going to buy, generally speaking, you get some sort of undercut in which, they test the liquidity down there, and then you look to buy after the fact. It's the opposite here that I think may happen, right? Do we break the highs, and then what happens if we break the highs and then it just bops back down through? Then people were looking for more exit liquidity. If it breaks the high and just rips, then you've got that kind of FOMO chase going on. But I would be surprised, because we are right to the tick of the highs. I would be shocked if we don't challenge that in some respects.
Here it comes.
So
there's the SPY down move right off the 522s. It's seeming like a real resistance there, building up there. We'll see if we get to the 522s, makes a move to the 523s. That's the move that gets that break right there.
Feels like it's testing our little 5-minute pivot here. That's where the top of the last 5-minute candle closed. It's kind of oscillating around there. So, yeah, keeping an eye on it. I'd like to, at the very least, see the sweep of pre-market highs, like Michael said, and then we'll see how price responds. Oh, look at that.
About to get hit through that 68 here, guys. So let's see if it's a 1 cent kind of recovery action. If not, I'm out. There's that 1 cent kind of recovery action, but it needs a hold now on this recovery. If not, it's the sweeps coming in.
Yeah, so we're through that high on the spot.
Hit there, guys.
Really consider that like
I'm so frustrated off of that. I was literally 2 pennies away from the profits there.
That's the worst. They saw your orders on the book, Mitch. They're coming for you.
They literally turned it as soon as I hit the freaking take profit out there. It was so annoying because it was like literally right there. I was just trying to make a little cushion. I went for the scalp, and then it just flushed on me instead. There's the hit down, and you're just building off of this. You're just ping-ponging. So I wouldn't be surprised if we pull back off of this 523. But you are seeing a lift around.
Cleanly through that pre-market high, right? This is the level that we're watching. This pre-market high. Now that we're through it, again, was that a breakout and then fail, or is that going to be just we're going to rip? So question is, if we pull back, we got to see what happens, and that's like 522.11. So if we can hold that 522.11, then I think that's just going to be more continuation higher. Bears are just getting their face ripped off. We say it all the time, right? These, even though you're still way down you're still down 15% off all-time highs, but now you're up nearly 10% from the lows, right? So it's one of those, bear markets are hard, right? Everyone just goes, oh, if the markets turn bearish, just short. It's like, yeah, but then every now and then you get these just rippers. And the short side of the game is really hard, which is why I always focus on the dip buy, right? Where can I get involved? For me personally, it works better, right? If you're someone who's great at buying dips, then just keep
Quick
going.
recovery to 68 right on the bottom of the VIX here. Here comes the ping pong action, guys. You can see it coming back to the 520s. This seems like we're getting a bunch of ping pong action here, guys.
Yeah, I got to churn through all the sellers waiting for that gap to be tested and trying to defend it. So wouldn't be surprised to see bulls want to see a flag here, I would say. Push higher, back test the high a day, maybe the previous open, I should say. And, let's see how it cooks.
I have just seen the most bullish tweet in the world. BlackRock turns cautious on U.S. stocks. Now, not any time in the last couple weeks.
Yeah.
Now. So if you want to know how wrong these analysts are, right? Super bullish right here. You can see all BlackRock, all these guys saying, oh, this is the roaring 20s. Things are going to be great. Starting to get bearish right here. It's insane. So we actually did a really good job. We came in, we tapped that pre-market high and then bounced for now, putting in some popping tails here, right, on this 2-minute chart. So we'll see what happens. But that was a first successful test, just showing that they're trying to defend this breakout. Again, I've been kind of with Mitch in the morning that I wouldn't expect a huge range today. I say that already having to remember in context. This is already a 1% range on the day. So
right, yeah, that's so wild. Looking at that candle, that's 1%. Yeah.
So in this candle's a 1% range. It's just nuts, right? So
Oh,
I always logarithmic charts, people. Arithmetic charts just hurt my soul. People that use them, especially for the long term, just always logarithmic. It's just this button right here on TradingView, the L. Doesn't matter too much on the SPY here, but like when I see the person like.
NAOV is at new highs, 1345s now, guys.
Yeah, if you ever see anyone doing this chart and they haven't done this, that person has no idea what they're doing in finance. It's a different beast entirely, right? This guy hasn't even graduated yet. This guy probably knows what he's doing. It's like the most easy new technician detector you can find.
For the viewers, would you like to explain the why behind that?
Yeah. So arithmetic charts basically takes the y-axis, and each of these are the same, right? So between here and here is 40 points. Between here and here is 40 points. Between here and here is 40 points, right? So it makes big moves like this seem way more extreme than they are. A logarithmic chart does it based off percentages, right? So you start to see percentage pullbacks as opposed to dollar pullbacks. Because when the stock or when the S&P 500 was $40, right, a 10% pullback was way more significant, or just, it's $4. When it's $400, a 10% pullback is $40. And then the people who leave long-term charts like this, they say, oh, look how extended we are here. It's like, no, on a percentage basis, we're moving just fine, right? So this looks like a bubble, and then this is just completely normal price action. And it's just, again, it's when you're scrolling Twitter. Now, for like intraday charts, it really doesn't matter unless you're trading something crazy, right? And you see the difference. It's like nothing. But yes, logarithmic charts for long-term charts, people.
Just want to say on the hourly here, we did sweep the highs of that crazy candle yesterday. We are testing the 50% pullback proper. That's at 523.77. So good stuff there. Good stuff there.
Yeah.
Like to see it. Want to see it keep cooking, and I'd like to see it sweep pre-market highs from what was that last Friday, and that will be 526.54. If we're going to do the crazy squeeze, that'd be the next kind of area of interest for me.
Yeah, so this is now we're up to, so we're through that pop, and now we're looking at yesterday's high. Not yesterday's high, that'll be Thursday's high. So we'll see if we get there.
523.87. I have a 523.87 that I have to watch here as resistance. I think that's from the 4-4. Yeah, the open. It's actually the high, the 523.87. That's the one you're mentioning. Ran right into that. So 15-minute 9 EMA holding well too. It's held it about 3 times on pullbacks.
Yeah, and this could just be a grind day. You know, could be one of those that every sell is getting met with stronger and stronger buyers. I just saw Bitcoin ticking back above 80,000. Very unfortunate for the people who got liquidated down here, right? That we just reversed higher. The real safe haven asset.
Oh,
Coin.
the Farcoin indicator is looking good.
It's trying to break out, right? It's insane how well this thing is has acted compared to like Solana and all of the actual real cryptocurrencies.
What do you mean real? Fartcoin's as real as it gets, brother.
Oh yeah, all in. Just a wild world in which we live.
You speak the truth. You speak the truth.
NAOV is wild, man. 1589 now, guys. I'm just glad I brought that stock up. Sometimes I'm not going to be able to trade them the best, but NAOV was definitely one on the radar. At least I mentioned it on Trader TV today. I hope those traders enjoyed that one. That thing's an absolute monster. It was up 100%. Now it's up 435%.
Sheesh. Yeah, you
Sober just showed up on the scanner, guys. Sober on the scanner for me. Sober.
Yeah, market just grinding. Right? No sense of it. Pull back. It did kind of exactly what we were looking for. Came back and retested that pre-market high. That test was successful. And now we've at least moved off it. Now it's to the point where if we do come back through, that doesn't feel like a liquidity grab. Like those are usually really fast and really, really violent. It just feels like it's one of those, we broke highs. And if we sell off later, that's fine. But again, nothing at all in the economic calendar. 3-year auction note, which is nothing. And then we have a Fed speaker at 2, right? So, I can never keep track of which of these Fed guys are important and which aren't, but this is daily, whoever that is.
Sober moving all over the place, guys. Be careful with that spread. I've seen it as wide as 42 cents. That's a little too wide for my blood.
Yeah, this is one of those.
But that SXTP, that was a good one that I should have been able to nail also. So 2 penny stocks that I should have been able to nail today.
So we are
the X back above the 68s now, guys. So you're seeing a little bit of a pullback, I'm sure.
No, and pull back in the market yet. So it's back to that pre-market high. Under that would be like the first, safe, I guess, short potential out there. My ACHR stopped out, and then my qubits is just, I'm up $1 on it. So just waiting. RTX broke down there, so that's something to keep an eye on.
Interesting.
So just gonna follow the system blindly.
I love the stoicism. You're like, stopped out. Is what it is. I trust the system. Yeah, you love to see it. That's how you can tell a pro, right? You don't get emotional about it. It is what it is. You run it enough times, you make money. It just is what it is.
Well, that's what, and for the people in my community, I felt like my job over the last, you probably felt the same way, has been counselor.
Yeah, exactly. Yeah, we've been doing group therapy.
Yeah, like because I think my swing systems, at one point, I think I'm about back to flat, but we're down from their highs like 10 to 12%. And they're like, so what are you going to do, Mike? I'm like, well, I'm going to run the system. I'm going to take the trades that it tells me to take, and I'm going to keep going, right?
Beautiful.
The beauty of being, either a trader who's been around for a long time or somebody who backtests and uses systems, is I can go back to 2008 and see what would have happened in the systems. I can go back to these times and look at it and say, yeah, sometimes things are shitty, right? The one thing you can't do, and this is what gets most people in trouble, is jumping from system to system all the time. That's the worst thing you can do. But yeah, short a little bit of RTX there, and then again qubits, it's just chopping around, and then ACHR, it really gave me nothing there before it came up and hit the highs. So maybe a re-enter if it breaks back through, but really I'm just kind of focused on these two. So RTX, instead of just using the high of the day, which is technically right there, I might just put over this kind of pre-market high. Just give it a little bit more room. But
the volatility there hitting my 27 limit there that I had there, guys. I only had $27 to play with there. Took an out there on the VIX. So that's it for me today, at least, guys. Not looking good on me. Was looking decent there on certain attempts there, but just the volatility just too wide right now. And it's just jumping way too much. And even with size at 100 shares right now, it's just way too much for this account. So just got to find a happy spot in between there, because even 100 shares there, not being able to hold through that move there. And it looks like it's going to get the rip now. So that's just how it goes sometimes. I still think that we get this pullback here. So that's the way I'll be looking at later into the afternoon. But that's just what I'm
chop here above highs. A lot of chop back and forth.
Yeah, and of course, as soon as it gets me, it's probably gonna just go for it now, guys. So we'll see what happens.
Look at these candles, right? Up, big candle down, big candle up. And again, these are big candles. They don't really look like it on my screen, but you're talking, 0.5% move on these 2-minute candles, which is again just
insane.
I think I keep doing that. I need to find. Is there a hotkey for this?
I don't know.
Shift click. There you go.
Oh, look at that.
I'm doing it just because I'm doing it so much, because it's very important to put these into perspective that these aren't normal candles.
Yeah,
the candle, the SPY generally does not move 0.5% in 2 minutes. Right. So when we talked about in the open lowering your size, this is exactly what we meant, right? Really, really lower your size, because we're moving at 0.5% every 2 minutes, which that is like generally a good daily candle move is 0.5% in a quote unquote normal market. You're like, 0.5%, that's pretty good. This is just insanity what's happening here.
It's pretty wild. I just want to note, man, if anybody thinks that fibs don't work or aren't worth your time, this is a great exercise in their precision, right? Let me pull it to an hourly, and look at that. Just we do the tariff range, and there's systems or traders or whatever different cohorts of people just watching this level, holding the line. So we'll see how it goes. That's where the fees went up to.
Not to out myself too much, but I have multiple systems that use that 50% of a weekly bar, 50% of a monthly bar, for pullbacks. And it's one of those that is there magic to the 50%? No, but it's just you got to pick something, right? So again, the idea that the swing system is you're looking for a wide range weekly bar, and you're ranking those by whatever metric you want, and then you're looking to buy a pullback. So there's only a couple ways that you can classify a pullback, and just one of the systems is just if it gets halfway through that center of the bar, then take the trade.
Right.
So it's one of those that you'll see a lot, and that's why I think a lot of these fibs work, is because it's roughly for all like the fancy fib numbers, right? It's roughly a third or 2/3, or right. It's whether it's 6.188972 whatever, or 0.66% or like 2/3 through it. I just think that's the
one thing of note too about the 50 fib. How I like to think of it is like, okay, we have an established trading range. What happens to price when it's at a discount? When it's under that 50%, are people just waiting to snap it up? Are they saying, okay, we're just a little bit at a premium over the 50% and now we're selling it? Like that's a very good sentiment indicator, very good kind of weather vane, so to speak, for the strength of a range and which direction that will want to break out eventually of.
Oh man, guys, I had that feeling it's gonna do it to me. It's gonna do it to me.
Mitch, are we
Look
crashing?
at the VIX now. Look at the VIX now, guys. Look at it, dude. It's just sometimes you gotta wait for the structure to get completely formed, guys. And there it is, 4 bars all on the bottom, holding on that 67.50s. I think you at least get some type of pullback here. The question is, do you break the 9 EMA? I'm just looking at the SPY on the 9, right? Around the 522 level. Can you break the 522? If you don't break that level, you can just stay in that kind of just grind up, right? So 522 on the pullback is the dangerous spot. If not, still got 32 to close that gap on the daily. So that could be the next gap to play there. So it's not a bad way to think about it. 536.70.
just for the sake of conversation and being devil's advocate, we can duke it out here, Mitch. This feels like what I call a bearskin rug day, where just everything that looks like a valid short just gets wicked up like this, and you're like punching air, like, what is happening? Who is buying up here? But then you zoom out, and we're not really up here anywhere on certain time frames, at least.
Yeah, this is where the VIX could get you, right? And the VIX could definitely get you on a time like this. And it's just how it is right now. The VIX is there to make and lose money, and it's definitely a fast vehicle. Today is just being a little bit too wide. Yesterday, I was able to make some pretty good trades on it at 75 shares. Maybe 100 was too much, but we'll see what happens, guys. And I think that it's going to be some back and forth action. I think the important part is just sectors and just staying at the top, right? Right now, it's led by financials and technology. And what's bouncing back a lot in the tech is health information services, some software names getting a little bit of a bounce back. So you're seeing some bounce back there. It's just if any of these are sustained rallies, right? That's the one thing that you got to be asking yourself. Micro Algo getting a little bit of a lift today as a software name in the mid caps. It's not doing too bad. Mid caps, not a bad area to be looking at. Maybe not large caps, but mid caps. Maybe doing well.
Yeah, absolutely. Great points about the sectors. I love sector maps, heat maps for this as well, and rotation tools too. I got to find the link, but my buddy actually just released a really cool free tool that has a visualization of the sector rotation, as well as a bunch of other great tools as well. Shout out podcast.
You ever looked at RRGs?
Sorry?
Have you ever looked at RRGs?
No, I haven't. What's that?
Let's do a little lesson for people.
Ooh, I'd love that.
Goldman Sachs looking interesting here. If you're looking for opportunities on the pullback, you think this is going to continue to run. It looks interesting, at least.
All right. So this will be I got to stop screen share screen. So we'll try to keep this quick, but I think this will be a cool lesson for people. Cool. So these were invented by a French guy, so I won't butcher his name. But essentially the idea is you're taking a center point and you're seeing how names or rotation or sectors rotate around that center point. So in this chart, the center point's the SPX, right? So these tails are showing whether or not they are weakening, lagging, improving, or leading, right? Compared to the S&P 500. So it doesn't mean that they're going up or down, just in relative rotation to the S&P 500, what's going down. So you can see recently, right, the comp, which is the Qs basically, have been doing worse and have been getting worse versus the S&P 500. XAX is the Amex composite that's been doing better and getting better. The TSX has been doing better and getting better. So it's telling you, so basically if you're moving this way, you are not only underperforming the S&P 500, but it's getting worse. You are getting worse underperformance of the S&P 500. And the idea is you want to find charts like this that are actually starting to outperform whatever index that you're in. And you want to rotate into those names, and you want to rotate out of those names that did this. So for example, if you had rotated, I don't know how long this chart, 5 weeks ago is when this chart started. So these were the dots 5 weeks ago. So 5 weeks ago, 4 weeks ago, 3 weeks ago, you could see that the TSX, which is the Canadian index, which is very industrial heavy, it's very commodity, gold and oil and that type of thing, has been doing much better than the S&P 500, whereas tech has been doing much worse than the S&P 500. So by watching this thing kind of rotate, and you can actually, you can animate them, it shows you what is doing, again, better or worse than the S&P 500, and you're trying to catch the point in which they're turning for those who do things like pairs trading or market neutral trading, right? So market neutral trading essentially means you're buying X and you're shorting Y, and you're trying to shut out the noise of the overall market. So in this case, buying the TSX, the Canadian index, and shorting this. But you can do these with everything. I've seen people do them with currencies and the center point being the dollar. I've seen them do them with individual stocks and the center point being like the S&P 500. But yeah, you can go through and see. So these are more longer tail width. And then you can animate these and watch these things go kind of in real time and see. Yeah, it was about 7 weeks ago, where we went from the SP or the comp was leading to lagging. So it's this very interesting chart type. That's a very dirty explanation. There's a lot of ways to kind of square that circle, but yeah, it's something to check out. They're called RRG, or relative rotation graphs.
Okay. I was wondering what the name was. Yeah, no, I love the tool.
Yeah.
I have not heard that name. That shows shows my lack of experience here, but it really is useful for sure.
Yeah, I love it. It's a good tool, especially the institutional level. It's used often. I see it.
Mm-hmm.
Yeah, it's
Mark
because
is
all those
hanging
guys
out,
are
man.
Yeah,
Mark is hanging out.
Well,
Yeah.
you got Steve's charts up there. Nothing's happening right now. So it could be one of those. Okay, we've gapped up and now we've pushed up, then we chill out. I don't think that would really surprise anyone. It's still, if the market closed right here in the books, that's still a amazing day. So it's not something that you would scoff at all.
Yeah, I'm watching the development of 15-minute candles now, since we have a little bit of time on the books here, and we are seeing topping wicks into a major level, but I don't know. It's hard to short this after that crazy day yesterday. I'm a little shook. Guys, with that that intraday move. It makes me feel like, okay, a lot of people got liquidated short, and instantly a lot of people got liquidated long, but now we're drifting up. So to me, that kind of reset the playing field short term here, when we have big liquidations on both sides probably occurring in a single day. And then for me, it's like, okay, the magnet's been lifted. Let's see where we go now. And it seems like the magnet is still drifting up here.
Yeah. That's a cool little chart. Grab from the streets. I always love, as much as some people hate Twitter, I love it just because I've curated my stuff so much that I don't have any of the nonsense or kind of idiots.
Totally. It's one of the best tools, I feel like. And if your feed sucks, maybe you just need to curate it better. That's my thoughts as well.
Right, so this is just from Against All Odds Research, it's a buddy of mine. And this talks about here is what happens if you're down a lot by April. And the reason I think April is important is because it's Q1, Q1 of stuff. And this is generally what happens, right? So 1932, 1939, 2020, and then obviously 2025. In all cases, you're up by the end of the year. In some cases, you've got a rough May and June, but in all cases, you're up. Very low sample size here, but you can see all these lines that occurred there. So again, just showing.
Oh, sorry.
More and more evidence.
Sorry about that.
I just looked up there. No, that's mine. That's my bad.
Video stair stepping
right here.
Oh yeah.
So again, only 4 instances or 3 instances, but in all cases, pretty big bounces. And again, the idea behind why this time of the year is important is because you have Q1, right? So at the end of Q1, you've got window dressing, whatever you want to call it, people rotating to different sectors and different ideas, and then you get a pop up from now. So this one's not insanely worse than 1932. If you want to look at that, but again, in all cases, after a big sell off early in the year, gives the market enough time to kind of rotate and go back to high. But like Mitch was saying, we ain't doing nothing, right?
We're just bopping around.
Bopping.
It is definitely a dull type of day, but hey, that's just how it's gonna be, man. And kind of expect it. If you didn't get that run yesterday, can't expect too much today. I mean, at least Nvidia traders are happy. That's to 105.60s. We all know that's big money, making some money there.
Oh, yeah.
Only question is, when do they let go? Because I don't think they're going to be letting go at least early here, and so they're still going to make some money.
Wow, from
Michael, does that kind of look like a Wyckoff spring forming?
It does. Let me grab we'll do another. This is the beauty of having all the nerds here, is we can do lessons. So taught you guys about RRGs. That's a chapter in the CMT. By the time you guys listen to me rant enough, you'll be able to just go take your CMT course. Let's do Wyckoff bottom accumulation systems.
This is another big tool in my tool belt, so to speak. I love Wyckoff, however you say it, charts and schemas.
Oh, Wyckoff. Yeah, Wyckoff's right. And yeah, this is one of those, like, he was hanging out with Charles Dow, right, who's created technical analysis for those who didn't. And the idea is,
good old VIX.
This is roughly how markets bottom, and you can see it in a lot of cases. And the idea, you ignore most of this, I think is the best way to do it. But, you know, we talk about these all the time. They're liquidity graphs, right? So you have some support, you know, support's made for some reason. The spring is really what you want to look at, where you have a quick undercut of that support and then a quick rally back through, and then things start to grind higher. So there's two ways to kind of play the Wyckoff pattern. One is, if you think you've identified the swing, you can take a really low risk shot there, right? Because if you're right, you know, your stop goes under the spring and then things bottom. And then or you wait for this right here, which kind of goes into Stan Weinstein's stage analysis, where he's got, you know, the bottoming stage and then things pushing up. But again, the idea is that this is kind of your V bottom or your capitulation or whatever you want to call it. And then it generally takes some time to grind its way back up to whatever the bottom of the pattern is. So the reason that Steve mentioned that is, if you zoom out, you can see I drew this line a long time ago. This area would be for support. And you could even probably put it right there as well. And then you have that undercut and then rally back through. So if you're someone who likes NVIDIA, this might be a decent place to take a shot, because what you do, you look at it and you say, hey, if I'm wrong, well, my stop's just right down here, right? So buying at 105, my stop's at like 85. So I'm risking $20 a share. Do I think there's a good chance I can make $40 a share? Well, if so, that's a 2-to-1 risk reward. And that's a trade mathematically you should look at taking. And the SPY is doing nothing. It's continuing its sideways march to nowhere.
Did you hear about the dire wolf? That's all I'm seeing on the street right now.
That dire wolf is everywhere. And my only comment was, did no one watch Jurassic Park? Which I don't think was a very original comment at all, but we should. And then everyone was clapping back. It's like, oh, this is a great thing for science. I'm like, yeah, gene technology is amazing. Until we wake up one day and that thing's 800 feet tall and shooting lasers from its mouth. And like,
I mean, we're getting into that age, Michael. We're gonna have robots. We're gonna have clones. I mean, get ready, guys. There's a reason why the movie exists, guys. It's always about one thing: desensitizing the people, man.
Oh,
you need to be desensitized first.
Then
they bring it out. Early. iRobot, man. It was to teach you what's coming, man.
Oh, you
Mitch,
go.
Mitch, you telling me we're getting Skynet? Is that what you're saying to me?
Skynet, Terminator, bro. Come on. It's. You can't tell me when you see that little robot do like the fake fall and like just like spin back up. You're like, yeah, I'm not fighting a robot. There's a very low odds of me winning.
Yeah, no, thank you. No, thank you. We're all odds based here, so I'm not taking that bet.
Only the Terminator, man. That's the only one.
A little bit of a push down
there. Big here, huh?
But yeah, you can go even further. What was like one of the first movies was 20,000 Leagues Under the Sea, which was like a giant, way back. My grandfather made me watch this old black and white movie, but it was about submarines before submarines existed, right? It was
wow.
It's what people, they always grab inspiration from. You're a kid, you're reading about this cool stuff that doesn't exist, and then you become an adult and you're like, well, screw it, let's build it, you know?
I love that. Like, everybody says art imitates life, but life imitates art too. You know, it's a kind of double helix. It reverts back in on itself.
I'm just waiting to build my gravity room to work out in like Goku. I'll come in super jacked once I figure that out.
You know, Mark, it's chopping sideways when we start waxing philosophic, you know.
Again, I say you could tell, because I started day trading at a prop firm, a real, like, at a desk in university. So depending on when my classes were, I'd get there at different times of the day. And if I ever missed the open when I came in, you could tell what kind of day it was just by, right, whether they've got their feet up on it. We had a little putting green, whether the guys were on the putting green or whatever, because you always you want to stick around in case something happened, and you could take a trade off it. But yeah, traders will find things to do to try to keep them out of the markets if they can. Ends up being the best move you can do.
Absolutely.
Interesting trade I'm seeing set up. I'm just looking around. I'm definitely bored. You can see I'm looking around. AAOI stock that's up 9%. Looks interesting as it's starting to reverse. It just had a nice pop early. Now it's all the way back down to 1220s. App 11 showing up about 10% up today. I'm just looking through like top movers of the day. And RCAT definitely still Red Cat Holdings still holding on. That one's doing really well, guys. I'd continue to watch that. I think you'll see more drone conversation. One of the things that happens with the move that's been as of late, and I think this is actually adding to the whole drone conversation, is that we've been in a battle that all the drones, at least all the good drones, are made in China. And this is a big problem for the U.S. And we all know how Trump feels about China. So DJI almost got cut out of the U.S. and recently it got at least allowed to continue for the short term. But I think in the long run, DJI might be cut out completely. And majority of all your drones, at least that even like, let's say, like the firefighters have, like emergency services, they're DJIs, right? And so they're kind of screwed in this situation. But what I'd look for is what other drone players are going to make money in this. I actually know a friend that, of course, Matt Higgins, a millionaire ex-Shark. He's actually working with a private company right now to push for this. And that told me even more and more how there's a big push for drones to be made in the U.S. And this is actually a big deal. So I'd continue to watch RCAT as being a name that could just lift off of that hype, right? So
well, we talked about earlier, right? That Trump came out yesterday and said he's going to spend what I think it's like 20 or 30% more on defense than any president ever, right? So if he's going to be right, that's the best contracts you can get are government, right? If they're going to start buying that stuff, and they're gonna have a lot of money to do it. I think $1 trillion buys a whole lot of drones. Now, I think part of the worry is that he's gonna buy a lot of like the old man stuff that he thinks matters. Like we need to give these guys more pistols or whatever. But
more muskets.
More muskets and crossbows or whatever. But yeah, that's if this was I was listening to a podcast from like this military guy, and he was saying Ukraine, for the U.S. and researching what war is going to be like in the future, the Ukraine war has been amazing for them because they give them like experimental tech. They go, okay, go see how this works, and they're able to do that. And as we've seen, drones have been huge in that, right? That you're getting a $200 drone that's taking out like $100,000 tank. If it's a war of attrition, you know what side of that you want to be on. So yeah, it's very interesting. This daily chart, actually, I was just looking at this, looks actually really nice, held up very well.
Yeah,
in that sell-off, right? That's right here, didn't move at all in that sell-off. That's the 200 EMA. Yeah, 200 EMA. It's still above that. There's not many things you can stay still above the 200 EMA. So that's a good looking daily chart.
Drones look great, but I'm still hung up on making crossbows great again, to be completely honest.
Yeah,
that's where my head's at.
All in on the. So we got to start like a gaming league or something for when the market's slow like this. Do we gotta?
Man, what do you guys play?
Just all Marvel Rivals right now. That's the whole only thing I have time for. Yeah, because we are still, and just so you know why we're waxing wise here. So this is 10:04, and we are at 10:34. We're the same price. So a half hour has gone by with no movement. Now, I think that this is bullish action, right? Because what we didn't want to see from the bull camp was a break through the pre-market high and then a sell back. And we're certainly not getting that. Every time we're getting down to this pre-market high so far, we're getting buyers. If that continues, then that's just bullish action that we gotta continue to keep in mind.
And if you look at the equilibrium of this current trading range, it's literally smack dab to the penny on that 50% range fib from the tariffs. So I see this as healthy digestion into that and a look to expand upwards into the premium side of the range. So I'll pop on the hourly again just to give us the frame of reference. This is when all hell broke loose up here. Right there is when the new announcement came out, I believe. Wait, no, that's just Friday. Holy, yeah, I'm so out of everything's so out of perspective with these giant candles. But this is a trading range, just this kind of capitulation move there after people were trying to buy this dip. So for whatever reason, this is the range that we seem to be responding to. So once we break this, then I'll move my goalposts and pop it up here. There's the tariff announcement, I believe. Wednesday? Yeah. Was that Liberation Day? It's been the longest week ever, Michael.
Yeah, Wednesday. I agree. Yeah. Yes. Wednesday.
Wednesday. Thank you, Mitch.
Here's some news. You guys were talking about Russia and Ukraine. Well, 2 hours ago, breaking news came out that Ukraine's Zelensky says that they fought 6 Japanese soldiers in eastern Ukraine and took 2 of them prisoners. So Zelensky is accusing China of joining the war and asking for the U.S. response. So if you're looking for tape bombs, watch out for that one coming from Trump. I'm sure at some point he's going to have to respond to this. We'll just see how big or Zelensky wants to expand this. Of course, Zelensky is probably still trying to battle the deal proposal that's being proposed to him for Ukraine to end the war, right? And I think this is another kind of war tactic game that could be played. So I always want to say both sides. I always bring both sides to you guys. But he has videos of it, and I think that's definitely going to cause people to be like, well, at least we might need to at least take the reaction from this. You guys can see Chinese soldier there taken hostage. So we'll see what happens there, guys. Crazy action. And this is from Zelensky's actual, of course, account.
I don't know how to parse this. That would be a major, a change in dynamics if China is actively supporting Russia. Obviously, they're buddy to some extent or another, but
not to the point where their soldiers should be anywhere near Ukraine, at least.
Before they were suiting up and sending in North Korean soldiers, and that was bad enough. But that's like your whole proxy, right? Here's your guns, here's your equipment. Go do the thing I want to do, but I can't do myself. And then, if they're starting to get involved, that's a different, it's a different beast.
And it says that there's now some significant number of Chinese citizens fighting for Russia. Also, don't forget, Russia needs soldiers.
Yeah,
they need soldiers badly. So this could also be some kind of mercenary group or something like that sent to China to try to help them or something like that. So
that doesn't mean like Occam's razor, maybe to me, but just
hey, we'll have to see. We'll have to see.
Yeah. Wild world.
Yeah, it's a wild world we live in, and of course, it's a battle of materials. That's the world we live in now, guys, and we'll continue living in that world. So we'll see what happens out there, guys. Always tape bomb environment. You always got to be on head on a swivel. That's why I think that's personally why I don't think this is the bottom. There's just too much headline risk for, I think, big money to call this the bottom too early. Because I think there's still headline risk out there right now. China saying that they're willing to go to all ends, right, today after Trump saying that he'll do another 50%. So what happens there, right? As much as everyone wants to believe that we don't need China, I think we kind of still do, guys.
Oh, I mean, absolutely.
We kind of need them to some extent.
We have rely much more heavily on their imports than vice versa. We still, everybody wants to talk about bringing manufacturing jobs here, but I don't know how many Americans want to work in manufacturing car parts and all of these machine goods and all of these, all of the things that they provide for us. And so I think that this is, without getting too political, I think it's pretty damaging to try to hardball them to this extent where I wonder if they can weather the storm better than us, honestly. But
well, and they won't, right? As much as this is we're going to bring jobs back, right? If Apple is going to have to pay Americans to put like screws in iPhones, they are going to get a robot to do that so quick, right?
Exactly.
It's going to be one of those. It will not go to low skilled American workers because it just doesn't make mathematical sense, right? They will come up with a machine or a system or robotics or whatever to
100%.
end up doing that. The reason that they haven't, it's like when people were protesting for like a $25 minimum wage, and McDonald's, I remember, just came out and said, at that price, we're just going to automate the whole process. They're like, we only have humans involved because right now it is cost efficient to have humans involved. But you know, at any point we can flip a switch and say, no, we're just going to have a fully automated McDonald's. You just walk up to it, and you've already got the iPad for ordering, and something happens in the back and spits out your Big Mac, right? So it would be the same thing. So the question isn't, I don't think, between China and America, it's between China and robots. Now, our argument could be that the robots, if the tariffs are high enough, have to be built in America, and that might be better paying jobs anyway. But it's not going to be. I don't think you're going to see a bunch of Americans sitting there putting in those tiny screws into the bottom of the iPhones like you see in the pictures in China.
Yeah, absolutely. I mean, I think it's so important to remember that we are a service-based economy, and if we reverted to a manufacturing and industrial economy, it's not exactly as bullish as a lot of people want to make it sound. You know, that's in some ways a big step backwards. And I think it's a better gig to try to work towards free trade. I mean, I'm assuming that's Trump's one component of his plan, where we sell software and services to Europe for 50% margins, and they sell us toasters or whatever for 5% margins. You know. So,
it's just a game. It's a game to be played, and it's a game that is being played right now. Finally starting to see that pullback into SPY off that 523 number. We did get above it and now back below it, but nice rejection there. It seems like that fixed trade, I had it. I just needed to use the 15-minute lows. If I would have been using that, I think I've been doing really well at this point now with the kind of this turn here. That's where I felt like, and I mentioned it, how I needed to let the pattern play out here. And so right here was that nice bottoming, and then finally a recovery of 68, now holding well, now getting to the 69. Am I saying it's going back to like 77? No, but I mean, 70 to 72 still within the range here. SPY starting to break down, pulling back. 520s area or the 90 EMA is where I'm going to be watching. You've held here on the first break of the 90 EMA. You held once, you held twice, you held 3, 4 times. Is it going to do a 5-time hold on that 90 EMA on the 15? That's what I'll be watching for in the afternoon, guys. It's 10:43. We're almost done here. But NVIDIA pulling back, also starting to see a little bit of some pullback in the market there. Bounce back in XLE today, at least finally a little bounce back, but you can see it's not holding. XLP not shooting off today, also telling me more and more not safety trade. XLF getting a little bit of a jump there, but now starting to pull back, so just be careful out there as that trade starts to pull back a little bit. Continuing to watch the XLI to see if there's anything that shows up there. And I think this is the relief bounce, right? We talked about even our title had it, right? Relief rally in motion. Signs of strength or just noise. I think there was some signs of strength today in the sectors, because you're seeing some good sector action hanging at the top, not just collapsing down. But now, of course, we could be taking out opening levels and pulling back into some gaps. The key, I think, is going to be getting through CPI this week, right? Because if you can get through CPI without major downside, I think that's the big watch that I will be looking at. Of course, we get that on Thursday. So just be careful out there. Definitely something to look at is a CPI report this week.
Yeah, it's and silence, right? It's one of those that the market just needs everyone to shut up for a bit, and I think then we can potentially put in a bottom. But you're right, the thing that dictates this market, even as a technician, right? I'm a CMT, and I go on all the time and say, hey, there are times for technical analysis, And there's times not really. And this is one of those times that, yes, you got to pick your levels. I'm going to buy here and my stop's going to go here. And you got to use technical analysis for that. But everything's governed by a tweet. So all we're doing when we're picking levels at this point is just saying, this is my line in the sand where I've got to punch out of this position. And then everything else is just noise and fugazi, right? So it's one of those where, yes, it's really hard to kind of sit there and say, yeah, I'm going to buy at this level or sell at this level, because you could get to that level and then a tweet could come out and it could be 10% lower. So continue to take your shots the best you can, but just know that there's no amount of price memory that is going to really decide direction versus just craziness, right?
Yeah. There's a little pullback there. SPY to 521, and VIX getting the jump there. It would have been a nice sell into the 70s, and that's just how it is, man. I got a little bit too close in the middle of this chart. Didn't play the bottoms on that, and wasn't able to wait for this move here, right? And so there it is. Another thing that I've been seeing more and more is 9:45, 10 a.m. reversals. Yeah. So I think it's just at this point, sometimes there's very rare times that I say this, but I think you really need to be looking towards more 10:30, 11 a.m. trades where you start to get some type of trend to actually show up. I think what we're seeing is a lot of opening wash for the day traders because they're confused as ever on both sides of the trade. So I think that you're seeing that kind of confusion at the gates. And that's what we got today. A little bit of confusion out the gates there. And the SPY did go up. But, I mean, from the open, how much further did we push? Not much. From the open, it's about 0.6%, maybe to the high opening price, 526. So at the bottom of this, maybe you got 0.9. So almost 1% up. Now let's see what we go down. Maybe we still go down just only 1% from there. That brings us back to like 519. A little bit of some ping pong action. Sideways on the daily is what we can kind of expect now. We'll see what happens if we can break back through that 523.87.
No, good call. Just a little quick flow update. My short-dated call scanners, my degen scanners, they're picking up a lot of Amazon calls, a lot of QQQ 444 calls, a lot of Google calls. So I wouldn't be surprised if we see a little pullback today and then maybe a range expansion tomorrow again, or maybe end of day. So just something to keep on your radar. The bulls are out. The bulls are out. They want to play. So.
Yeah, we'll see what happens on that. 0% tariffs on Russia, 10% on Ukraine. Let that sink in. Yeah, that's a good mention, Rando. Putin had some conversation in that one. But we'll see what happens. I'm sure that had to do with, you want to end the war, can't put tariffs on me, that kind of conversation, right? But we'll see what happens there. It's always a game to be played, and that's how politics is. There's a reason why Michael says, you guys over there, you Americans out there, we're stuck in the game of politics, and that's just the way the game's going to be played here, guys. I think we need to be careful. We also need to continue to watch the troubled areas. I talk about these all the time. It's the auto delinquencies. It's Ford coming down and going towards the gutter. Keep watch on the troubled areas of the market. Another area to look at, Capital One Financial, right? Taking a look into the financials. What happens to these credit card names? You start seeing these names really drop. That could be delinquencies kind of getting the pressure there. We'll see what happens on that. COP could be another one. Oh, not COP. What's it? COF. Capital One. And then there's, what are the other names? Like MasterCard or Discover.
AXP, Visa.
AXP, yeah. And then there's I forgot Discover's ticker.
DISC, I think.
DFS. There he goes. Discover. Sometimes I'll get it, guys. It just takes me a second. But these can be, dead cat bounces, and I need to be watching these to give me signs of what's really underneath the hood here. If we want to know where the trouble could be, it's the consumer. Like Steve mentioned earlier, we're consumer-based economy. And if the consumer goes in the gutter, well, guess what? Recession is here. And that isn't the bottom. That's what I would say. But if, the consumer can stay resilient and we don't see the consumer dropping with these tariffs and prices jumping again, which I don't think anybody wants. I'll just be as honest as can be. I don't think anybody can handle the grocery price going double again, because it's already gone 3 times. That's what I would say, at least when I go to the grocery store. I mean, you get 5 or 6 items, you have more than $100 guaranteed. So it's just how it is, guys. We need to be careful out there. We need to continue to maybe play quick action on the day trades. I still don't think the long term's to the upside here, but that's just because we're in bear markets, and I don't think this bear market is going to be a 2-month bear market like it was in the pandemic. Reason why is the Fed stepped in there to save the day. That's why it was such a short-lived bear market. It was because the Fed came and put the backstop. And I don't see the Fed being able to do that in this case, because inflation could go rampant with the tariffs. So the conundrum's on there for the Fed. They can't just come in and run and try to put a backstop on this market. And if anything, what have they been telling you? They've been trying to take away from that buying of equities, that buying, that backstop. They've been trying to slow that down. And in this case, they're not just going to put that back on. And I think that what you need to be looking for is to see what happens, how that develops for the intermediate and long-term traders, right? Short-term, you can still kind of play these bounces, but just remember, they're dead cat bounces until we start to see stocks really recover the 200-day moving average. That's when you can start to say,
until proven innocent is the way that Brian Shannon always puts it, and I like that. It's like, hey, take your bounces, but just understand you're trading counter trend right now. Things can reverse with a single tweet, so keep a tight leash on them, right? Take your trades small, and right. If you're right, great. You got it's small, but you got good participation in being small. But if it comes back down, you're not getting hit too much, right? So we're seeing a little bit of a bleed in the market here, pretty much right back to the opening price.
So. Stay small, right? I had the right direction pick today and still got wiped out, right? So like it doesn't show you that even the right direction right now does not helping, right? I felt pullback eventually here because we went straight up. Well, we still went up a tiny bit, stopped out some traders. Now we're coming back. What is it? It's the max pain, guys. It can't just let you win on one side right now. That's the way the market is. So the bulls now start to feel a little pressure. Do I run with my gains that I have from yesterday? Well, yeah, they're going to be feeling the pressure. So I think it's all about how you trade, how you take profits. And if you're seeing yourself struggle in this time, understand that these are different market environments. There's different trading in different market environments. And if you don't know how to trade in this environment or never have traded in a bear market, you didn't trade in 2022, well, you also don't know how to trade in this market. It's completely different than a bull market that's seeing ripping rallies and dips being bought. Because trust me, I was seeing it just a couple of months ago, how everybody was on that buy the dip game, where if a stock dipped, they just bought it. And that's how it was Palantir and HIMS. It was just, they didn't care. It was like literally like, oh, you're down on the hourly, I'm buying. You're down on the 5-minute, I'm buying. You're down on the 1, I'm buying. That also told me to be careful, told me that something's going on here. The froth is getting frothy. And a lot of times the crash is fast. And that's what happened here. We went into an even faster crash. And expect whipsaws in the new age of investing, which is free commissions, which is high frequency trading, which is soon to be 24-hour markets. So if there's anything that I expect more of these bull and bear markets, quote unquote, right? I expect these to be faster and faster as investing keeps evolving. So what does that mean? Yes, you'll have 20% down moves. You'll have 10% up moves. You'll have another 12% down move. You'll have another 15% up move. I expect the markets to be like this moving forward. Why? Because there's so much trading going on underneath the hood nowadays that markets can essentially drive in one direction, especially with social media. You look at it, right? What happened? Well, social media completely flipped. Now all the bears are out there, and there's a lot of arguments to be had on the bear side. Well, that's when you have bear pressure. right? And then the same way there is on the upside. There's always going to be the optimism, the bullish side that can always find the bullish outlook. So the truth is, markets don't go one way. They're going to come back and pull back, but the overall trend will always be to the upside. So that's why you always see Michael kind of saying it, and he said it today, right? That he's still looking for areas where he can come in and play the market. Why? He knows he has time and history on his side there, that the markets will come back, but you got to know how to play them on these pullbacks. You got to be willing to let go. You got to be systematic, right? Especially in a moment like this, when volatility is at its highest.
Yeah, that's really what saved, not only financially, right, but mentally more than anything, right? Is I became very Zen-like, right? People are asking, oh, well, what are you going to do? Well, I'm going to follow my systems, right? It's a reason I tested my systems through 2020 and all the way back to the year 2000, because I've seen lots of bear markets. I know what happens. Sometimes not fun. Eventually it becomes fun again, right? And I think it's one of those, if you don't have that experience, that's when you have to take that. You don't have the experience or the back test. You've got to take that and you've got to say, okay, well, until I know what my system is going to do in this kind of market, I'm going to size it down and trade a third of the size, a half of the size, whatever it is. And yeah, just size down and so continue to take trades, and you will never regret that, right? You might get a little bit bummed, if that was a bottom, and say you bought a bunch of stuff yesterday at a third of your normal size. You'll be a little bummed looking back that you could have made more money, but you won't be. The regret on the other side would have been way worse, right? Where if you bought everything at full size and it was another, 5% or something down day, that would have been worse. So just, again, look at it as, if you're new here, you don't have systems in place that tell you what to do in this market. Just say, I'm just gathering data, right? This is a crazy market and I'm gathering data. If my system can survive at this lower rate, then when the market returns to normal, you size back up again. And now you have that information, you have that data, because hopefully you're recording all your trades. Please don't be lazy, record your trades. And then you can go back. And then the next time this craziness happens, which at some point will be another pandemic or a war or the tariffs or whatever it's going to be next time, it will happen again. Then you have that data to pull on. You say, okay, well, my system drew down 25% or 30% during this craziness. That's okay. So I'll continue to work as is and accept that drawdown and come out the other side. But yeah, you have to gather the data some way, either through, again, please record your trades. This is like, if there's one thing, if I get hit by a bus today and there's one thing that you take away from me, record your trades, right? I've never met a trader who has become a professional trader, who's made a lot of money, who doesn't have data on their own trades. So especially now, because this is a crazy market, you can generate data, really good data right now that you can go back to in 5-10 years. Hopefully it's that long when we have another insane market. But just to wrap up my trades before we go, I'm still in qubits short, up a little bit on that, not too much, but a little bit. And then, so yeah, there's the qubit short. Again, that was the initial short. And then ever since then, we've just been messing around, targeting 2-day VWAP, which is now 654. And then in, not ACHR, I got something like RTX, it's right in front of me. Yeah, so still short RTX right here. So I took, I believe it was this one short, and again, stop at this high, and then targeting the 2-day VWAP, which is 117. So that's, I did that, and then I took the small loss on ACHR. So if we pull back a little bit here, that will be great for me. If not, it'll be a small losing day. But those are the trades as I've taken them, and then we'll kind of see what happens.
All right, VIX now almost 71.50. So you're definitely getting that pullback action, and just one of those days, used too much too early, and there it is. The VIX actually taking a nice little trend move off the 90 MA. Pullback happening. I think what you're starting to see is the leak happen, right? And so the leak can be just like leaving the faucet open. You got to see when the buying comes back in. Right now, it's not coming back in. You can tell by the sectors all going red. right here. You can see it on my screen. I was just trying to, like, when we were kind of talking about that, I was showing it from the open. Now everything red from in the last 10 minutes, everything's starting to pull back, every sector. And so it just tells me more and more. Systematic selling tells me more and more that I don't think this is the bottom here. The big thing though is it's also not going to be the kind of where we go and take this out today. I don't expect bottoms to be taken out today. I expect sideways action here. So sideways action is going to do what? So when you see a ramp up of action like we saw in the SPY in 3 days, where the markets can just drop in 3-4 days 15%, well, what's the number one way to get traders? I'll tell you right now. It's to make them trade a crap ton thinking they're getting another 15% move. And instead, it just chops us up and goes sideways and doesn't move here. That's why I need to wait for the next major move, whether it's up or down, having my foot on the brake pedal a little bit, sizing down, just trying to play maybe base hits until I get that next major move set up like we did when we got this bear flag, right? We got a couple of attempts where it went up, kept running into resistance, and that 576 really started acting as resistance, and we saw the move down to break through the pattern. I think we need to be waiting for a move like that, whether it be to the upside reversal or downside, to really get on the gas pedal again. That's what I'll be watching for, and we'll be looking for it here on the channel, of course. Always keep up with, of course, my man Justy Trades joining us today. It's always good to have you, my friend, and we'll keep battling here, guys. We'll keep looking to see what we can find in the market. It's not easy, and stay tuned, guys. Third day tomorrow in the competition. Today, Tuesday, last day tomorrow. I'm going to keep battling. Took a $100 hit in that smaller one today. Still up $100, so we'll keep battling. Had some good names move today. Man, NAOV was up like 460%. It's down to 334%. Just 334% in one day. We'll see what happens out there, guys. Stay safe. Stay safe, traders. It's not easy, and you got to keep battling in this market.